Welcome back to The Explainer. Today we're doing something really exciting. We are breaking down the fascinating mechanics behind the world's most valuable currency. We're going to completely strip away all that complex financial jargon and look directly at the live exchange dynamics, the macroeconomics, and the trading ecosystems that make this currency an absolute powerhouse. It's a deep, structured look at a true economic heavyweight, and I am thrilled you're here to unpack it with me.
But first, let me ask you something. When you think of the most valuable currency in the world, what immediately pops into your head? For a lot of folks, the assumption naturally drifts toward the usual suspects, right? The heavy hitters of global finance. You might be picturing the US dollar, given its status as the world's reserve currency, or maybe the euro, backing the massive European single market, or perhaps even the historic British pound. Well, if you guessed any of those, you'd actually be wrong. Okay, let's dive into this. 3.25. That staggering number represents the reality that just one single Kuwaiti Dinar, or KWD, currently buys you 3.25 US dollars. It is, without a doubt, the undisputed highest valued currency on the planet.
So, here's our roadmap for today. We're going to cover the unlikely heavyweight, what fuels the dinar, the global currency face-off, inside Borsa Kuwait, how to trade the KWD, and finally, why KWD tracking matters. Let's get right into it.
Section 1. The unlikely heavyweight. We're looking at the basics of Kuwait's currency exchange, where a single dinar is divided into 1,000 fils.
Moving right along to part 2. What fuels the dinar? Let's unpack the macroeconomic drivers behind this thing.
Look at this. 92% of Kuwait's national income comes directly from oil export revenues. Kuwait is a massive global energy player. So what this means is that when we talk about the value of the KWD, we're fundamentally talking about global energy markets. Rising crude prices generally strengthen the dinar, which means decisions made by OPEC, the major global oil coalition, and those intraday crude price trends, they are quite literally the lifeblood of this currency's valuation. But, it's not just about pumping oil out of the ground. It's about how they manage that wealth. Unlike some of its neighbors in the Gulf region, Kuwait doesn't strictly peg its currency solely to the US dollar. Instead, they use what's called a managed currency basket system. And honestly, this is a brilliant strategic move. By pegging the dinar to a weighted basket of major global currencies, rather than just relying on one, Kuwait gives itself enormous flexibility. It essentially acts like a giant shock absorber, cushioning the KWD against any extreme volatility in the US dollar, and maintaining a much more balanced global purchasing power. And all of this builds a literal economic fortress. Check this out. Kuwait holds a massive $34 billion in foreign exchange reserves. That energy revenue directly bolsters their reserves, creating a phenomenal safety net. Now combine that with an astonishingly low average annual inflation rate of just 0.8%. That is among the lowest anywhere in the world. These incredibly strong fiscal policies are exactly what keeps the currency so stable and maintains its purchasing power, even when we see severe global economic downturns. All right, part 3, global currency face-off. The KWD going toe-to-toe against the major fiat currencies.
And this brilliantly illustrates the dominance we're talking about. The live exchange dynamics are wild right now. The dinar is trading at 3.2504 against the US dollar with a really strong bullish trend. Against the euro, it's sitting at nearly 3, and against the British pound, it's at 2.57, all showing huge upward momentum. While it's staying highly stable against the Indian Rupee, at about 270, it is clearly flexing its purchasing power against the absolute most traded fiat currencies on Earth. I really want to highlight this one specific growth metric. The Kuwaiti dinar has actually appreciated 5% against the euro over the last 12 months alone. So when the European Central Bank makes policy shifts, you see it instantly in the KWD to euro exchange rate. Because one single KWD equals roughly 2.98 euros, European imports suddenly become super attractive to Kuwait. That creates some massive trade and arbitrage opportunities in the forex markets for any sharp-eyed traders who are watching these fluctuations. Which brings us to part 4. Inside Borsa Kuwait, exploring the local economic arena. Just take a second to process this number. $116.4 billion. That is the massive market capitalization of Borsa Kuwait, their official stock exchange. That really puts the sheer scale and gravity of the local financial arena we're dealing with into perspective, doesn't it? Let's quickly run through the structure and health of this exchange. Borsa Kuwait operates across 3 distinct tiers: Premier, Main, and Auction Market, hosting 174 listed companies. They're seeing an average daily trading volume of $85 million with a really solid 4.2% year-to-date performance. But here's the kicker, the really crucial stat. Approximately 18.5% of the exchange is foreign-owned. Combine that with their inclusion in the MSCI Emerging Markets Index, which is a major benchmark for global funds, and it shows incredibly strong, enduring international investor confidence in Kuwait's economic health. Okay, part 5, how to trade KWD. Let's navigate the brokers and platforms that give retail traders access to this market. So how do you actually get in on this? First up, XNES versus Light Finance. On one side, we have XNES, totally known as one of the world's most popular forex brokers. They've got ultra-tight spreads, instant withdrawals, and maintain full regulatory compliance across over 190 countries. Compare that to Light Finance on the flip side, which offers deep liquidity but really leans heavily into crypto and derivatives, offering an insane 100x leverage on futures and a full copy trading ecosystem for anyone wanting to basically mirror successful traders.
Next, let's look at FP Markets and IC Markets. FP Markets is an award-winning broker that strongly caters to the Middle East with dedicated Arabic support, offering zero-commission trading on their advanced Xstation 5 platform. Contrasting that, IC Markets is a direct market access broker heavily designed for the pros, boasting ultra-fast execution and raw spread starting from absolute zero point 0.0 pips. And rounding out the platforms, AvaTrade takes a very mobile-first approach with their AvaTrade Go app, offering fixed spreads and access to vanilla options, plus fantastic regional support. Admiral Markets, though, places a huge emphasis on premium analytics and massive stock volume, giving traders zero commissions on over 4,000 stocks globally through their invest.mt5 platform. Basically, there is a platform tailored for practically every trading style out there. Finally, Part 6. Why KWD tracking matters for your personal financial strategy. So, the crucial point is, why does this actually matter to you? We've got 3 huge, highly practical use cases right here. Step 1, international business. If you import or export goods to or from Kuwait, monitoring that daily rate is exactly how you protect your profit margins and accurately forecast your costs. Step 2, remittances. For expats sending money home to places like India, the Philippines, or Egypt, timing your transfer right when the KWD is at a favorable rate can save you significant amounts of cash. Step 3, forex strategy. If you leverage KWD paired instruments, real-time rate awareness is absolutely non-negotiable for executing precise entry and exit points while managing risk. Long story short, timing the KWD directly impacts your wallet. But if you're gonna track it, you have to know what actually moves the needle every day. While the dinar is highly stable overall, it absolutely still experiences actionable intraday volatility. The daily drivers you really need to watch include macroeconomic data and GDP reports, and especially central bank interest rate decisions from the Fed, the ECB, and the Bank of England, because those create immediate ripple effects. Also, keep your eyes peeled for any regional geopolitical shifts in the Gulf, but most importantly, intraday price fluctuations on global oil benchmarks like WTI and Brent crude. Oil remains the primary pulse of the dinar. We've covered a ton of ground today, from macro energy drivers to the massive scale of the local stock exchange, down to the actual trading platforms you can use for the undisputed champion of fiat currencies. So knowing the mechanics of the world's most valuable currency, how will you adapt your own trading or remittance strategy? Think about how these insights can sharpen up your own financial planning. Thank you so much for diving into the source material with me today. Keep learning, keep adapting, and I'll catch you on the next explainer.